Hey, good morning. It is Julie. Tuesday, February 9th, and there was a program I saw last night. Um, Christine Lagarde, Ray Dalio, and three China guys, Gary Cohn of Goldman Sachs, talking about where China is heading. Extremely informative. I highly recommend that you watch this. Talks about how China is transforming from a production country, producing cities, producing infrastructure, into a consumption service based economy like the United States is. And now China is restricting their imports and restricting their exports as they make this turn in their economy, as they have devalued their currency, as they are turning into an economy that consumes its own products. This is putting the world of hurt on all those other countries who built their business models up over the last 20, 30 years of exporting everything to China as China was in its production mode. So now that China has turned its corner to a consumption-based economy, you're seeing the ramifications of that in the commodity market diminishing greatly. Copper, oil, everything, steel. There's no need for these huge commodities anymore. Um, so we will see how Australia fares, how Europe fares, how the rest of Asia fares that used to supply China with all of its stuff. So, very, very interesting program. Getting back to the current markets, risk disclosure, real quick. Futures trading contains substantial risk and is not for every investor. Past performance is not indicative of future results. And the hypothetical performance disclaimer, no representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Getting to the price action today, the only thing on the calendar at 9 o'clock Central will be the JOLTS job openings, and that will be very telling for the Fed, who, despite everything else occurring in the economy, um, insists that it's okay to keep raising interest rates. If we get a good jobs report, that may, shore up their argument, but I don't see how they possibly could raise any more in 2016 myself. Um, Coming into the markets yesterday, we had a very muted market, and this looks exactly like crude. I'll flip over to the crude chart in a second. And how goes crude? How goes the E-mini market? But we really had some really big ranging days nonetheless. We came in from Globex and then had another sell off um, at the open of the E-mini. I mean, for the E-mini range, I mean, it's been huge, um, much larger than it normally is. And I expect no different today. We just broke out of this little bear flag, pausing at the central pivot and the close. So we'll see if we pop back up in here or if we continue racing towards S2. I have my market analyzer now set up for entries that I'm testing out for myself. And if I like this, I'll release it. But so far, it's looking pretty good to keep me on the right side of a trade. Um, Obviously, I want to trade in the direction of the weekly, daily 60-15. I like taking my trades, selling the high. And if I'm buying the gold or the 10-year note or the 6E, I want to buy those lows. Let me change this over to the crude market. Okay, here's crude. And as when I open this up, you'll see that it looked very much like the E-mini chart did yesterday, a little bit more pronounced in its price action, and it came down to its trend line, and it looks like it's holding and popping back up at the moment. But I would expect this market to tank at the open given the IEA report from yesterday indicating that there is no end in sight to the oversupply that is now mixed with no demand, given that what I just talked about with China restructuring its economy. Russia supplies China with its oil anyway, um, but we just really don't have any place to put this stuff anymore. And the IEA report came out and said that it's going to be in tankers for all of 2016, as there's no demand for oil right now. So that'll keep prices low, which is good. I just don't know how low they're going to run. Um, Historically, um, market makers have come in and run crude up before an EIA report on Wednesday. So I don't know if that will have anything to do with the pricing today. If we do see this popping back up into the value, that's what's happening. Is the market makers move this up higher into a Wednesday oil report because they know that it's going to get slammed down much further. So we'll see if that's the sort of pattern that happens today. But otherwise, I will be watching my new 1, 5, 10, 20 entry system to see how this correlates well with my weekly, daily 60, 15, so that I can flip it over to a market. So I can flip it over to a market and then take those trades in that direction as I see the entries are working. So this so far seems to be so good. Um, I have the 1 minute chart and a 5 minute chart um, sitting here so that I can, of course, be monitoring what the location is for these trades, but nothing yet to show that there's any end in sight to these trends. The euro, not as much as a safe haven currency, but I think that there's some safe haven status going on with this current move, as well as the ECB, Mr. Draghi, saying that he's going to be doing whatever it takes to shore up their QE. So we'll see how far the Germany bank gets to rein him in on this. So right now it's going strong. The 10-year note, the gold, the euro, and it's short the E-mini, the crude, and the NASDAQ. So pick your poison for the short side and buy your pleasures for the long side, and just enjoy watching another day in trader's paradise. We really have been enjoying these big moves and lots of things to choose from. Nothing makes me happier than seeing markets moving. And today it looks like they're moving again. Y'all have a great day. Thank you so much.